Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 22nd of December 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So during today's session, we will of course be covering live market analysis. We'll go through a short list of trading opportunities right now. We'll go through a trading plan for the rest of the week as we continue with the US session today, tomorrow, and also as we go into next week as well, beyond Christmas and the Boxing Day bank holiday, and then into the new year as well. We'll give an overview of the commodity markets, what we can expect, and of course we'll go through our top trades of the week too. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldandsilverclub.com. Okay, great. So with that, it is, of course, the 22nd of December. So we have a good opportunity now to reflect on the year, see how the markets have performed over 2016. So as of the close yesterday, the best performing of these markets was ethanol, up over 41% this year, followed by orange juice, up 32%, then heating oil, up just under 29%. Crude oil, of course, has recently surged. It's now up 24% so far this year. Dow Jones up just under 17%. Soybeans up 16%. Palladium up 15%. Silver looks like we're going to end the year above 10% so far anyway. It's up just under 13%. Sugar is up 12%. And we've got gold, which after the highs from Brexit, where it was up over 30% on the year, we've had quite a large correction all the way down to just being up 5% so far in 2016. And some of the markets which will be worth keeping an eye on as we go into 2017 from a contrarian point of view, markets which have not performed well over 2016, but we could see a change in that price structure and dynamic as we go into next year, are wheat and cocoa. I would definitely keep an eye on those markets. Wheat in particular at the moment, actually around key support at the 400 zone, is worth bearing in mind. So with that said, what we'll do, again, last week we did cover the January effect and gold, how it tends to move this time of year. I know a lot of you do tend to trade gold, silver, oil. It's very popular. So I'm more than happy to just go back and recap on what we discussed this time last week, just to give you a bit of a breakdown of what we typically see on gold at this time of year. So of course today is the 22nd of December. Tomorrow is the next trading day, or the last trading day before Christmas, and then next week of course we'll be going into the Christmas holiday period, which will be between Boxing Day through to New Year's Day. So what typically happens this time of year as we approach this period? Definitely we start to see a slowing down in the markets. We certainly saw that on gold yesterday. Only moved about 70 points from high to its low over the course of yesterday's session. So we can see the volumes are starting to get thinner now, and with that you tend to see quite a lot of markets consolidate. Also what it means is if you've got big trades going into the market next week, traders, institutions or funds who are putting on trades would have a bigger impact in the market when there's going to be less volume going through the market. So sometimes that can cause exaggerated moves. Often a lot of traders tend not to put on too larger positions over that period because it can cause quite exaggerated moves in the market, but occasionally you can see that happen, and it can cause some volatility. So next week, although often you expect the markets to consolidate, sometimes you can get these exaggerated moves in the market, both up or down. Now gold, typically around this time of year, it does normally consolidate, and certainly over the last 5 years or so we've tended to find this time of year is where gold reaches a bottom. So this happened last year following on from the FOMC statement where they increased interest rates. The subsequent day after that was actually the low that was formed for gold. After that, it continued to consolidate over the next couple of weeks, ultimately bottoming out in the first week of January. Well, ultimately rallying, I should say, in the first week of January, and it went on to rally over 15% in the first quarter, over 1,800 points from the beginning of January through to mid-February. So from a seasonality perspective, if you go back into gold over the last 3 years, through January, certainly the first 3 weeks of the year, gold has rallied over the last 3 years. And you can see from a historical perspective over the last 5 years, 15 years, 30 years, this is known as the January effect. And typically this is where we see big inflows into the precious metals. Particularly this is more viewable and more apparent if we have seen a considerable decline prior to January. So where we've seen in some previous years where gold and silver have been breaking out over the course of December and into Christmas, into that period where we've seen them rally, often we don't see such a big move over January. But where they're coming off very oversold conditions, which is the case right now on gold and silver, where they're both quite considerably oversold at this point in time, although they could still go lower, it is at a point where you would expect the potential for a bounce higher as we go into January. Typically that bounce either happens after the FOMC statement, which was last week. Obviously that didn't happen last week. This week we can see gold and silver just treading water around the supportive levels and the lows from the FOMC statement. But as we go into next week, I would suggest that really you want to just keep some capital available to take advantage of the moves that we could see in January here, certainly on the metals. So with that, what I'll do, I'll go over to the charts. We can have a look at that. Obviously take any questions if there are any questions on that as well. So I'll just bring it out. First of all, we can have a look at gold. So I'll bring out gold, and you can see here gold has really just been consolidating the last 4 or 5 days now. Yesterday, quite a small candle which formed just on the daily chart there. So a range of about 70 to 80 points, which is quite small for gold. Its typical range can be between about 100 to 200 points. So that is less than usual, but that's typical for this time of year. You can see we've certainly got an overhead trend channel at the moment on gold, which gold is struggling to break above. It is just moving sideways and it consolidates. Another point to note on gold, that often when it has a sell-off, when it corrects, so you can often see these large spike tops like we had over the course of the US election. So it spikes up and it essentially creates a bull trap, and then very strong rejection candle and follow through. We've had that several times when we've reached the top here for gold. However, when gold forms a low or a base or a bottom in the market, often what it will do is it will consolidate sideways, basing for quite some time, consolidating and then slowly but surely edging up, and then before you know it, the gold market has moved over 1,000 points. You know, we had this sort of formation last year as well. So this happened over December, over January. Very quiet trade actually over the last couple of weeks of the year on gold, and we just consolidated and moved sideways last year. And you can see at the moment we've got about 4 or 5 days worth of consolidation. The initial breakdown that we had from the FOMC statement, it followed through for 1 day. So the following day, on Thursday, we got a breakdown, obviously, to the lows here of approximately 1,122 US dollars an ounce. Then we had a retracement, couple of days worth of retracements, and then it's just moving sideways. So it's not continued this big fall lower. It is vulnerable. If gold does a break below 1120, we could certainly see 1,100 US dollars per ounce reach. That would only be a $20 move actually from where the price is being supported at the moment. And possibly I would also look at 1,100 and also 1080. That would be the major zone going back to July 2015. So a potential revisit of those zones. If we do break 1120, move down to 1100, possibly 1080 could be the major levels. In terms of gold right now, if it has the legs to retrace from this current point, and it is just consolidating right now, we're looking at a number of correlations here, which I'll talk you through shortly. But essentially, if we were to see some sort of reversal from this point, a V-shaped reversal pattern, or consolidate over the next week or so, and then start to build a base breakout higher, I would be looking for a move back towards, if we were to get a January effect move, which can last between 3 to 6 weeks typically, if we were to see that sort of formation in the chart, I would look for a potential retracement back towards the 1250 zone is what I would look at over the course of a 6 to 8 week period. If we did manage to form some sort of a base here for gold around this zone and then get a retracement. Now, not necessarily, that doesn't mean it will necessarily continue to last throughout the whole quarter. It could be that we just get a retracement over the first few weeks weeks here of the year in January, and from that point onwards we come back towards maybe the 200-day moving average, the 100 MA, which are very quickly actually coming back down again. So dependent on how their trajectory here, if they continue to break down and come down, I would be looking for a move, for a retest possibly of the 200 MA, and then possibly a sell-off from that point onwards as well. So it's just something to bear in mind. That's what we're looking at right now with gold over really the next couple of weeks and then into January too. So this consolidation at the moment, I suspect this might continue for a little while here unless we do break below 1120 and close below that. Silver is also noteworthy at the moment. Silver, it had one of these classic rejection candles earlier on in the week, which we didn't want to get involved in. We were just observing that to see whether there will be some follow through. It's happened a number of times over this year where we've seen rejection candles form at the lower end of this trend channel, which has been in place since Brexit. And these rejection candles, they break above the previous day's high the following day. They get sold back into, market consolidates, so silver consolidates, and then within about 3 or 4 days, it breaks out higher again. We saw that several times recently, going back to October. Again, rejection candle with a 200-day moving average, popped higher, closed, breached above the previous day's high, didn't close above it, and then sold off again, consolidated slowly but surely, made its way, forming a short-term base, and then popped higher back towards the upper end of the trend channel. More recently, again, we saw a similar move here before the FOMC statement. We had a rejection candle form at the lower end of this trend channel. The following day broke out. The next day, we saw a rejection candle, didn't close above the previous day's high, consolidated, retraced, and then built a base. So what does that mean for the price action at the moment? Well, it means, first of all, be wary of these rejection candles, which form at the lower end of the trend channel unless you get a break and a close above the high of the rejection candle. Also, I would expect that maybe we'll just consolidate and hold around this zone for silver unless it's got, unless the US dollar can continue to rally, which we'll look at next. Essentially, silver right now is holding on to $15.80 per ounce. That's next major resistance level on the chart going back to February, March this year, and also the swing low going back to May. That's the level that got broken out from. That's the level which is currently providing support. Previous resistance has turned into support. And we're essentially seeing this market hold again here. So we're getting a bit of a pop lower today. But what I suspect we'll see is possibly a continuation, consolidation sideways here, possibly not breaking below this low. If we do break below, it might close back above it again, just moving sideways. And then we might, if we're still moving sideways, right into the end of the month, into the end of December, then I would look for a pop higher back towards the upper end of this trend channel. Now that will change if we were to see silver break back below $15.60 per ounce. If it broke and closed below that level, it really does open up the doors here to the next swing lows, which would take the price back to approximately $15 if we were to see a move sideways and another breakdown lower. So that's what I'm looking at for silver right now. If you look at the gold to silver ratio, that does favor silver having more upside at the moment rather than gold. Silver's more undervalued than gold at this point in time, and there is more upside potential for silver versus gold. Now, also moving over to oil, we're actually quite interesting in oil following on from today's price action. I'll be interested to see if this does close with this sort of rejection candle, which is at a previous level of resistance, which could turn into support. We were looking at this actually on the live trading room just this morning. And if you look at it based on a weekly closing basis, you've got definitely a nice pop higher last week, gapped on the open up 5%. Oil then retraced, but ultimately closed above the weekly highs. And we closed above this major area of resistance, which has been providing resistance going all the way back to August 2015. We broke and closed above that level just last week here. And you can see at the moment we're getting bid back up again, support at previous resistance. Obviously, traders utilizing that as an opportunity to add. I would like to see whether this price structure will hold. So if we do hold with a rejection candle into the close today, support below some key moving averages, the monthly pivot, if this level does hold, that could actually provide a potential trade opportunity to take advantage of a slow grind higher here for oil. Oil volatility is still been more than some other markets, but it's in a bit of chop right now. It's just consolidating above previous resistance. It hasn't really followed through from last week's rejection candles, which formed over Thursday and Friday. We've just seen a bit of choppy price action this week, but I am looking at this as the potential for another move higher. Certainly the the overall sentiment is in favor of the bulls versus the bears at the moment for oil. So I would favor a buy rather than a sell. But I'm looking for a next opportunity to add to this position as well. Now, moving over to the grains, I think certainly less of you do trade the grains, but I'll just put it on your radar. Wheat at the moment, if it does retest the 400 zone, this is a level where a lot of traders are not really that keen on selling into wheat at the moment. We've seen a lot of support around that level, around the 390 to 400 zone. It's rotated back towards support, getting a little bit of a rejection candle form on the daily chart at the 400 zone. Watching that, volumes are not really that big today on wheat. You can see here fairly thin volumes. Day-to-day volatility so far has not been that much, but I am looking at the potential for a retracement back towards 420 resistance. So we're definitely keeping that on the radar right now as well. And it's also just worth noting that coffee has been basing now. It's formed this basing formation, this basing structure over the last couple of weeks now off the 61.8 Fibonacci retracement level. So I would also keep that on the watch list. And just look at the correlations here. Look at platinum. And also keep an eye. Well, platinum actually is worth keeping an eye on. And also, I'm looking at the 10-year bonds. So the 10-year bonds at the moment, you can see they've been very strongly correlated to gold this year. Now, it's not always the case, but certainly this year from April, there's been a very strong correlation between 10-year bonds and gold. They've been moving in lockstep with each other. If you overlay a 10-year bond chart with gold, look at it going back to April and May this year, they've been almost identical in terms of their moves. And I do note the gold, the US 10-year bonds at the moment have been trying to form a base. Now, trying to work out whether this is just a bear flag and we're going to just rally up and then break back lower for the next move lower here. So whether that's what we're going to see, another breakdown, or whether we are going to develop a pennant formation with the potential to break above resistance here. And in that case, that could lead to a basing formation for the metals as well if we do break out higher here with 10-year bonds. So keeping an eye on that for the correlation too. And also just monitoring, this is the US dollar index, which looks like it's trying to roll over here at the moment. Certainly it's overbought. It can stay in an overbought condition for a long period of time. So it's not enough just to say US dollar index is overbought. So it's been overbought for a while. But at the same time, it is starting to display some signs that it's running out of steam here. It's getting a little bit top heavy. It's had a break and a close below the previous day's low yesterday. Today, not really too much action based on strong US data, which has come out this afternoon. We've not really seen too much of a pop higher. Looks like it could roll over and start to correct, or it might just move sideways over the course of next week. And also just keeping an eye on gold priced in euros. So gold price in euros is also worth just having on the radar. I will just simply bring that out. In fact, let's have a look. We'll have a look. This is gold. This is silver price in euros, and I will just bring out gold price in euros. It's worth keeping an eye on this because we have seen quite a lot of correlation over the course of this year with gold euro and also gold US dollar. Gold euro for the most part has led gold against the US dollar. Normally the moves that we've seen in gold euro have been about 3 to 4 days ahead of the moves that we've seen on gold against the US dollar. It's revisiting support. It has tried over the last early part of this week to form a base here, potentially start to rally. Had a close and break above the previous day's high, higher low. On Wednesday or Tuesday, actually, into the close, we saw again just a bit of consolidation inside candle. That's revisited the lows here, and we're back down at the monthly pivot. So watching gold euro carefully. Also, I do note that it is at a major level of support going back to around the 1080 level. So we'll see whether that level does get supported, but overall not really too much happening here on the metals today other than drifting slightly lower. But I would keep an eye on oil. I quite like oil price structure at the moment. Given this bounce so far, I think that could actually produce a trade setup into the US session today, into the close as well. So definitely have that on the radar. Now, in terms of the top trades that we've had over the course of last week, our portfolio performance, so our trading update using our exclusive research-driven strategies. Those have included natural gas, where we've taken advantage of a pullback here, then rejection candle adds support, producing a 275-point return. We've also taken advantage of another wave lower here on palladium. It's been quite a big correction, actually, following on from a November where it managed to rally over 25%. It's given quite a lot of those gains back now. So this was quite a straightforward trade set up to take advantage after last week's FOMC statement for a 430-point profit. And also US oil just getting on the gap fill the previous week off the Sunday open, where oil gapped higher 5%. And very simply, this was a really straightforward gap fill trade, trading the sell back towards the previous level where it gapped from the previous Friday for a 260-point profit. Now, if you would like access to highly profitable live trade ideas shared with you, ready to implement for instant results, you can go over to our link here. So do go over to www.jointhegoldensilverclub.com. Okay, I'll go through that in a little bit more detail very shortly. Just to provide you with a bit more information on that. If you do complete the application form, please make sure you mention that you've been on today's FX Street webinar. There is a special offer for FX Street clients and attendees, so please just mention that when you fill in an application. We get a lot of applications at the Gold and Silver Club. If you want to make sure you get the special offer, please mention you've been on the FX Street webinar. Okay, so what does it include? Who is it for? The private members live trading room. Whether you're a new trader, you want to develop a solid understanding of the markets, fast track your results, or even if you are an experienced trader but you just want to take your trading to that next level, the private members live trading room is definitely for you. It includes the following. So private members get access to exclusive live trading room webinars, so you can watch Gold and Silver Club expert traders analyze the markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit, profit, stop loss targets, as well as walk you through live trade ideas ready to implement. You get access to email and SMS notifications, so you get those push notifications and also email notifications every time there's a new trade, any trade management, any updates to a position, and you get commodity research and a week ahead trading report as well, exclusive to the Gold and Silver Club, with our proprietary trading research and market insights to help boost your win rate. So again, the private members live trading room includes exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, real-time trade notifications via email and SMS, so you're not missing out on profitable trades, details of where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live support to help you through each trade, and institutional level trading research and commodity insights to help give you an edge in the market. So again, all you need to do is go to www.jointhegoldensilverclub, complete the application form, and we will of course get in touch with you ASAP. Okay, fantastic. And with that, of course, being the 22nd of December now, I wish you all a fantastic Christmas, guys. Fantastic Christmas and New Year's. We certainly look forward to catch you back here again in 2017. I wish you a profitable one. And of course, very much look forward to hear from those of you who will be making an application and joining us at the Gold and Silver Club. So with that, guys, yep, take care. Have a fantastic one, and we'll speak to you all very soon. Thank you, everybody. Take care. Bye-bye.